Hello, everybody. Welcome back. Hey,
What's up,
Arvin, what's
man?
up? Good, good.
Hey, good, bro, good. Feels like it's been a while since we caught up with each other.
Very long, actually.
That's okay.
Long overdue.
I think I posted one video a couple of days ago about uh, income generating activities
Hmm.
and versus non-income generating activities. And I can't lie to say that the month of April, we spent a little bit extra time for doing non-income generating activities lah.
I see.
So
Yep.
that's probably why. I mean, we did put in some videos in between here and there, but nothing at the context that we wanted it to be. So this is the video for April. This is the big video for April. So if you've been disappointed with the rest of our videos, this will make it up lah. Okay. So this is
Yeah
going
lah.
to be
One good
fully
one.
informational, fully loaded, and probably help us with the direction for at least the next quarter. So yes, Dalvin, you want to introduce what we're talking about this week?
Yes. So the all important, the all informative market outlook for Q2 2021. So Q2 covers basically April, May, and June. And probably you can extend it a little bit more about
Yeah.
till July. So that's pretty much how the market moves. So we're looking for the next 3 months. This month is pretty much over, and so we're looking forward to May, April, and May, April, pula, May, June, and July. So at least for the next 3 months, these are the trends. These are the the
What we can
global
expect lah for the
we
shorter
can
term lah.
expect. Yes, correct.
So the first quarter we picked up
Mhm.
from the fund managers that the Global Resources Fund was going to do well, and it did really really well. It did I
Really
think
well,
what 12 13
definitely.
percent in the first
Yep.
quarter itself. So we listened to what we did and we told you what was going to happen, and we made good money. Okay, so
Yep.
now let's quickly review at least the Global Resources Fund. So I specifically asked this question to the fund managers in the meeting, and
Mm-hmm.
because I was really happy about the global resources bounce because it's such a high bounce, and this is the response I got. I'm just going to pull it out and just read it as it is, okay?
Okay.
So basically, what I asked was, so hold on, I'm going through the group. Where did it
And
go?
it should be somewhere lah. Just search.
I remember
Might have
taking
been
a
a while ago.
screenshot.
Mhm.
I didn't delete it. No way. I can't know. I don't know where it is now.
Let me quickly find it then. It should be here lah.
Okay, yes. So I
Got it, huh?
asked,
Okay,
what is
got
the
it.
outlook for the commodity section. So normally we don't ask direct questions like because the fund managers don't really want to ask, don't really
Mm-hmm.
want to reply directly because they also sometimes feel accountable for what they say. But basically, this is the gist
Correct.
that I got. That I say it's natural to be bullish on the commodities and an economic recovery. Okay, so bullish meaning that optimistic lah in layman's term. So it's good to be it's natural to be optimistic in towards the commodity sector, especially if there's still demand for such thing, and while the supply is intact, we can see a consistent amount of growth here. Okay, since
Mm.
the beginning of
Yep.
the year, some commodities have ran and the equities have also followed suit. So which is true. Okay, we've seen numbers flying at the moment. So going forward, it's going to be more selective and based on what is still undervalued. So the gist here I'm saying
Mm.
getting is that it's already flown. Okay,
Correct.
so
It's not
it's
gonna
already
go any
made good
higher.
money. So now
Mm.
from now onwards, is it going to make another 10? I don't know. I
Yeah.
don't think so.
Mm-hmm.
So whoever has bought commodities in January, February, like we advised, congratulations. Thank you very much for listening to us. We are also very happy that we sold those funds to you. Will I be focusing on commodities from now onwards? Very, very slow down a bit, lah. Slow down a bit. Not to say I
Mm.
won't be going nuts
Like
again.
we're not gonna back
So
out completely lah. There's still a bit
yeah,
there,
not
but
back out.
not much
So
though.
maybe
Mm.
we would have gone like, okay, put a few thousand in then, and then maybe not just do $100 a month. Just a simple thing lah. Because
Mm.
it might drop, it might go up, and whatever not. Okay, we
Yep.
don't want to go too much at the moment.
Correct. I
Just a
think, and
small
then
risk.
another point to consider is, especially when it comes to commodities, right? We're talking about things like crude oil, and then things like basic food supplies like corn, wheat, all this stuff. So these things, their prices have gone up a lot in the past few months, especially since the recovery has begun. Take crude oil for example, from like 40, $50 per per barrel, or how they measure it, it's now up to like 70, 80 per barrel. So that's pretty much a big jump in the
That's a
commodities.
huge jump in 1 quarter. Yeah.
Mhm. So yeah, that's pretty much expected. But when it's high, it's gonna go low. When it's low, it's gonna go high one day. So it's
Yeah.
just a cycle, lah.
So that's it,
Mm-hmm.
guys. So that's commodities out of the way.
Mm-hmm.
What's next? So what is the
Next thing,
uh,
let's go. Let's come home. Let's see what's happening in our
Malaysia?
local markets.
Okay, so Malaysia is interesting because the small medium cap industry has done really, really well. So much so it is at the point that we are talking right now, it is at its all-time high.
Mm-hmm.
Okay, so because it is at the all-time high, I do believe there can be some growth because economies are not truly open yet, but there might be some short-term volatility. Okay, there
Okay.
might be some short-term corrections, and that's the gist that I've got because though we've been doing how do I say, revenue generating activities, but we've
Mm-hmm.
done, I've gone for quite a couple of talks and started talking to people. So one of the events that I went to, I don't want to say his name lah because I don't want to quote him, but a
Yeah,
very
yeah.
big person in the company mentioned that in the next 2 years, we're going to be seeing a bit of volatility. But if you have a 2 to 3 year outlook from today, when COVID-19 is like settled, and we should see another round of profits like we saw somewhere last
Mm-hmm.
year. But don't
Okay.
expect it in 2021, 2022.
I see.
The markets need to correct a little bit, and then it probably bounce 23, 24 kind of a thing.
Mm.
And that's unit trust, guys. That's natural.
I think one
So
thing that's probably going to be the reason behind this correction is going to be the hike in interest rates, like we've seen in we
US
probably
lah.
will come to US next maybe. Since it's related, like ever since US announced like, yeah, we're probably going to increase the tax rate, we're going to increase this, increase that, but correction started everywhere. So even in the local markets, I
Especially
think
with US, right?
that
It's a bit
could be the
tricky
same
because
thing.
the correction didn't really
Mm-hmm.
happen in US. The
Uh-huh.
correction happened in China because China was starting to tighten up their interest rates, and
Okay,
the
interesting.
markets dropped because China, like if you're following what we're saying, it's actually 2019, 2020, it did double digits, high double digits for both years, 20-30% growth each year. And that's what happened. That's why we've been telling everyone at the start of the year, end of last year, stay away from China, stay away from China. But now it has dropped because I think inflation was getting high, and the government had to come and control a little bit, and it dropped quite a bit lah, quite a bit Chinese
Mm.
equity,
That
and
kind of government intervention is quite normal, lah, I guess.
it
Like
has to, otherwise the
it
inflation
happens
will
all
be
the
too
while.
high.
Correct.
Yeah.
Yeah.
So
You
again, now
inflation too
buying
high also then
opportunities in China has come back again. So we
mm-hmm.
can start considering small sums into China. We don't know how much
Mm.
of the correction will it keep going down, or what's the number like. But it's okay. It looks like
Mm-hmm.
small sums will be good. Okay, back to Malaysia very quickly.
Okay,
So
sure.
Malaysia, first and foremost, we got no interest rate problems. We don't foresee any interest rates being hiked at this point of time.
At the moment,
Um,
lah.
at the moment, it looks good. In the next 1 year at least, it looks good. Okay. Now, like I said, small caps have been high, but there were indication by the fund managers that there might be a little bit more of a rally with the small caps, especially
Okay.
um, there are certain sectors in the markets that are not open yet.
Yep.
Mainly, like, I don't know what they called it, but it's basically the vented frustration markets lah, where people are waiting to
Uh,
travel, waiting to shop, waiting to
Hospitality, tourism.
hospitality, tourism. So
Mm.
these markets are going to be like revenge,
It's gonna
shopping. I
be
don't know. There's
yeah.
so many
I think
terms
that
out there lah.
the term that you're looking for, I think, is revenge spending or something like that, right?
Yeah, something like that lah.
People are
So
just gonna go out, spend their money, and
as
that's
soon
like,
as
let's
these
get
things are
out.
open, airlines and all these things are going to start
Oh,
flying.
well, we are waiting
And
as well.
now, so that is the potential with Asia Pacific, with this region especially.
Mm-hmm.
And economies, like I said, at the moment, it's very difficult because not all sectors are moving. So
Hmm?
you need to select the sectors very, very carefully. So far, so good. So far, so good. No stress. Uh, but this is the slightly longer outlook I was talking to you about in terms of
Uh-huh.
Malaysia. Um, Again, banking sectors are not bounced up yet. Mainly Malaysia, as we know, like last year, the healthcare and all that did really well for us. And then this year, a little bit of technology, a bit of manufacturing, supply chain investments have done well. And Mr. DIY has done well as one
Oh
of the
yes,
main
very good.
stockholders of our.
Double the price.
So it's quite good. And so that's Malaysia. Saying that, I am taking a certain portion out and putting it into different equities. Okay, so I'm starting to spot opportunities, especially in the Indian equity. So what I did a couple of weeks back was I sold some of the Malaysian small caps and then bought the Indian equity. I know people are saying, "Hey, Arvin, why buying Indian equity? Because COVID-19 is a third wave. It's crazy right there." But let me remind you guys what happened in March 2020. The whole
Mm-hmm.
world was suffering by COVID-19. The markets dropped like crazy, but when it bounced, people made huge sums of
Huge
money.
amounts.
And
Yep.
at this point of time, this is where I see the opportunity. I might be absolutely wrong. Okay, I might be absolutely wrong. This is what I'm saying. Okay, it's Arvin's opinion. Okay, so if you have small sums, it might go down further. We don't know. Things might get worse. We don't know. But the fact
Mm-hmm.
that vaccines are already there, uh, things might speed up. It will bounce at some point of time. So anything that's COVID related at this point of time, any drop that's COVID related at this point of time, I feel it's an opportunity.
Yeah, it looks like it.
Okay, so because COVID is going to be, I mean, it's not going to last forever. Like I said, 2 years, 3 years. That's the outlook. That's a short-term outlook for unit trust anyway. So
Mm-hmm.
anything that is there's a gap at this point of time, like India, go for it.
I see. Okay.
Okay, so
Okay.
that's what I would
Interesting.
say. But not all. Just again diversify. Put a certain amount, 30% of your what you're putting in into India. I don't
Mm.
believe in going gung ho. Some advisors go gung ho, but not my style lah.
Yeah, I
I
mean,
still like to kind of balance it out, be a
kind
little
of
bit
gung
safe.
ho once a while in certain funds among ourselves, but not for
Yeah,
the
yeah. But
clients.
as
We
an advisor, a
don't want
bit
risk
scary
losing
to
it
gung
lah.
ho lah.
Correct. Correct.
Okay,
Yeah.
so but this is where I see the one of the bigger opportunities that is there. Now the second opportunity that fund managers and a lot of people out there in the industry, not only from Manulife, speakers from CIMB and also Fin Huang have mentioned similar trends. What's happening right now? The sweet spot of 2020 was healthcare. Now the
Uh-huh.
sweet spot for 2021 is technology.
Yep.
Okay, so what now we have to understand when we say technology funds, of course, Chinese equity, they've got Alibaba and all the Tencent and stuff like that. But now, if
Mm-hmm.
you look a little bit deeper, Alibaba has been restricted recently. Jack Ma has been
Yep.
restricted, and Tencent and all of the Ant Group has been restricted.
Mm.
So, what is the next technology? So, we're going to have to start looking into US. So the US market is starting, it is actually doing extremely well right now with about 13 to 14% returns per annum in the last 14 years.
Correct. Yep.
Crazy. Crazy means crazy. It's so high. But then, you know what is the best part here is the fund managers are still very optimistic about the US, very optimistic, mainly two main reasons. Technology, a lot of technology funds are based in US. So sometimes when you go to different fund houses, they say, we'll sell you
Mm.
technology funds. What they basically do is they take Facebook, they take Amazon, Google, and all of this stuff. They put it together. Maybe we put Alibaba and Tencent,
I
and they throw
see.
it out there as a technology fund. So, but what does the Manulife US equity fund is? It's mainly a technology fund anyway. It's just a different
Mm.
branding to it.
Yep.
So it does four of the big technology funds in the world, which is Facebook, Amazon, Microsoft, and Alphabet, which is Google.
Google. Yes.
Okay, so four of the top. So they don't have the Chinese technology funds there, but the US equity is covered this four very, very well. Now that combined with the rate of vaccination that's going on in US is going to be the
Mm-hmm.
first country, not the first. I think Israel is quite far, but I mean, we're from Malaysia, so Israel is irrelevant to us.
I mean, US they produce the vaccines, most of it, and
And
they're gonna
they've pretty
prioritize
much
themselves.
hogged 300% more than they need lah.
Yeah.
That's what I've read. So they've got more than enough, and I think they are going to be the first country to be vaccinated,
Mm-hmm.
and which will mean that they will be the first country which would have economic recovery, which will spill
Mm-hmm.
over globally as well.
Yep.
So
That's pretty much what happens lah. What happens in
yeah,
US, pretty much reflected here over in Asia. So
So right now, short-term trading, dangerous to say because it's a double-edged sword because
Mhm.
US equities are really high, 14% per annum, which is not natural, but it looks like the sweet spot is still in the US.
Mm.
So I would still hold on a little bit more and see how it goes. I would still prefer to buy India because that's my style. I like to buy things that are cheaper than things are looming high, but a little bit of each, like you can't go wrong there.
Yeah, I mean, if we dollar cost everything, then I guess just put everywhere lah. It's
Yeah.
gonna buy
Now,
high, buy low. It's gonna
correct,
cover
correct.
everything.
So that's covered commodities, that's covered India, that's covered
China,
US
India,
equity.
US. Yep.
China, we haven't really gone much. We go China, Asia Pacific, and I want to spill over to REITs now from
Okay,
US.
REITs,
So
the
I
nice
want you
ones.
to, I don't know if you've noticed, Dalvin, the Sharia Global REIT
Mm-hmm.
is actually doing quite well as well. It's doing
Yep,
double digits
I already
already for the
noticed that
first quarter.
because I've been putting in on my own as well for
So
myself,
now,
and yeah, it's nice.
why this is boomed up is I want you to see the trend and I want you to correlate to what I'm going to say next. Okay,
Okay, sure.
Sharia Global REITs have done rather well, mainly because a lot of its holdings, a lot of its real estate holdings are in US.
Ah, okay.
So the
Yep.
the US is recovering. Suddenly you realize business is recovering. Suddenly you realize, hey, hold on, REITs is recovering. REITs which was absolutely not moving last year, absolutely dead.
Mm-hmm.
It's starting to move because obviously the Asia Pacific one is still slower compared to the global REIT one because the
Mm-hmm.
global REIT has got exposure in US, it's got exposure in Europe, and
Mm-hmm. Okay.
Europe is the next market that's going to recover.
Okay. All right. Okay.
Okay,
Okay.
so that
So
is
yeah, yeah. Now
probably
it's kind of making sense because it seems like because they are pretty much leading the race to recovery. Let's put it that way.
That's why the Sharia
So.
Global REIT is also moving
Mm,
faster than the Asia Pacific REIT. So again, that's what it is, guys. You're gonna need to diversify a little bit everywhere, and you never know what's gonna move, and buy things in the cheap and stuff like that. Now that brings me to Asia Pacific REITs. Now I don't know if real estate can drop any further. I
mm,
only see it
maybe no.
moving
Mm.
upwards. Uh, Fast or slow, that we don't know. Can it drop a little bit? Yeah, maybe it would. But if we take the Sharia Global REIT as a trendsetter, we know that when things COVID-19 gets better in this side of the world, the REITs will also start picking up at the similar pace of hopefully move
Mm.
into double digits. So it's already doing a positive 3, which is on an average market very good for the first quarter. So if you can do 3 per quarter, okay lah, 12% per annum. But that's just
Yeah
wishful
lah.
thinking lah.
Yeah.
But it doesn't work
So
like
when
that. But that's just
when it
wishful
comes
thinking.
to Asia Pacific REITs, it's mainly the main holdings are in Singapore, right? Like global REITs
Singapore,
is in US.
Australia, and Hong Kong lah.
Mm. Okay, okay. So
So,
basically,
so
in
those things
Singapore's moves,
are,
they'll move lah.
yeah, it will move at some point. It has to be a regional recovery because, like you see, at
Mm-hmm.
the end of the day, Singapore is still the business hub for like Southeast Asia. So if Southeast
Mm-hmm.
Asia is not moving, Singapore can't really, there's no really demand for it. And this is where I wanted to correlate another part. So yeah, though the European equities will move as well, the second compared to US, don't don't discount Asia Pacific moving as well because once US recover, the direct beneficiary of US is always Asia Pacific because it's where our goods
Mm.
go to. So when the buying power of US increases, stuff from here will move there as well. So
Yep.
even though if you're not fully vaccinated, the opportunity do still lie at this region, in the Asia Pacific region. So when US recovers, it's a good for Asia Pacific. So I would say keep invested in US, but slow down, but keep yourself in Asia Pacific. Definitely keep yourself in India and balance it out, lah. Balance it out. And if you start seeing big margins, certain places, move them towards REITs, move them towards, I know, slightly
Mm.
stable funds, maybe like the flexi funds or stuff like that. Bonds are, I don't know, bonds are doing horrible this year. I don't see it recovering. Nothing's going to happen this year. I don't
Well,
think so, at least, my
ditch bonds for a
layman
moment lah.
talk. I'm not going to go into technical stuff because I'll lose to the top people. But in my absolute layman opinion, I don't think bonds is going to go anywhere because everyone is still looking for equity because they know equity is
Correct.
going to bounce. But how much will it bounce? It's not going to bounce like 2020. As long as it does, anything above your 8%, man, we should be celebrating. Because we don't want to be spoiled by 2020 returns. So let's go back to reality and just expect
Yeah.
it. That's it.
Yep. It's
Go
pretty much
back
a
to
good
2-year
number. Yep.
break-even points, go back to 8% per annum, and that's it. You keep your expectation standard. And I mean, I actually a bit scared last. Sometimes I've been seeing agents, not from our agency because we don't do that. Like some other agents from other places. I don't want to mention who and what. Don't get offended if you see what I'm saying as well. It's just my
Oops.
view. At least you can do whatever you
Yeah.
want. But they've been selling numbers recently.
Mm.
Or 6 months, 30%, 6 months, 20%, 6 months, 1 year
Ah.
made 40%.
Yep.
So a
Yep.
lot of people out there are doing this at this point of time. And actually, one of my good friend, I was out with him yesterday, which is also my client. He said, "Hey, bro, one of my agent from this company works with me, but she said, uh, 6 months, 20 something, whatever, I can't remember, very high numbers." I
Mm-hmm.
say, yeah, that's normal. What I mean, the last investment you did 6 months ago also did that, but you don't forget that's only one time. We cannot be expecting those numbers every time. Every time, I mean, this is just the opportunity, lah. That's market. So if you stop picking from this time to that time, I also can show huge numbers. We don't want to do that, lah.
Yeah. I mean, we'd rather
I was
go
just looking at one of
for
my clients who
consistency
invested
lah then. Mm-hmm.
May 2020. Made then the EPF cannot withdraw anymore lah. And then in between ICNA, birthday comes and all of that stuff. She's doing 40% in 1 year. So now I
Okay.
cannot be taking that as an example because I know that is not. So the next numbers are not going to make 40%. So
Mm.
sometimes that's a bit misleading lah. Maybe to collect
Correct.
sales and stuff like that. But I think our agency should stay away from doing such things
Yeah,
because
I think
it
yeah. I
can be
mean, when it
misleading.
comes to this situation, I'm pretty sure we have clients that who invested during the absolute low point, and until today they've made crazy amount of gains, 20, 30, even 40, like you've
Yeah,
said.
yeah.
But
And I
when the
even tell my
next time
clients, I
comes
say, yeah,
in,
you're seeing this
these things are
artificial. I mean,
unrealistic,
they're not
lah.
artificial. They're seeing these supernatural numbers. But don't forget, this will average downwards instead of
Correct.
upwards because when you keep investing, you see at the end of the day, we want to make, how do I say, you say you can't afford to do 100,000 one time.
Mm.
So you break it down or something like so you're going to have to average it out anyway. So sometimes maybe the third investment you do market drops. We don't know what happens when. So as
Yep.
long as you get 2-3% more than your EPF over a long period of time compounded, man, you'll do very, very well.
Yep. Yep.
Yeah. So that's that.
Mm.
So back to real estate. So
Yep.
real estate Asia Pacific, that's the situation. So we've covered what now? Global resources, we've
Global
covered India, we've
resources,
covered local,
India,
we've
local,
covered
US REITs,
US, we've covered REITs,
China. Have
uh,
we?
China. Okay, so now
Mm.
China, I actually gonna have to be honest here. I didn't read up enough to say stuff, but I know it has to do with interest rate increase or tightening on the economy because
Mm.
very, very on the surface, right? Very on the surface. They basically, from what I hear, and if I can just rejudge it, trade what I heard, and without going into detail, is basically not letting the inflation go out of hand in
I
China because it's
see.
been doing really well for the last 2 years, and the government is tightening stuff
And
so
that
that
leads to the correction that we have
that has
currently.
led to the
Mm.
massive correction in the Chinese equity.
Yeah.
And so that is basically what's happened in China. That's why you've seen the Chinese numbers drop.
Yes, that's
And
like a small opportunity for us there, lah, but not a
yeah,
massive one, lah.
there is a risk with US that interest rates will increase. I think they did increase a little bit, but if there's a threat of inflation in the US, they will follow the same suit. And if that happens, the US equities will drop, guaranteed.
That's like
Natural.
like a light bulb lighting up for us, lah.
Yeah, lah.
Nope,
It's
we
just gonna
buy.
but something lah. So yeah, maybe monitor for another quarter what's happening in US. If it goes in, if it start moving in the 20s, mid 20s, then maybe it's time to get rid of some portions because like
Mhm.
Chinese equities, they're looming high. Um, so one of those things lah. We just got to be very careful and see how we trade. So
Okay.
that is basically the equity market for the unit trust market for second
Q2
quarter
2021.
2021.
Mhm.
I don't really have anything else to say. I've just kind of touched a bit of everything. This is just my opinion, our opinion. don't make any decisions based on this video, because by the time you watch this video, markets might have changed. Speak to us, and then at least we will tell you. So I've told you by India, but by the time you watch this video, might be a week from today. By then, markets might have dropped, and then you go and buy India and it drops again. Say, hey, Arwin, you told me buy India. What? Yeah, I did. I told you, but I don't know what's going to happen. It's the weekend today. We're posting this video up only on Monday. Things might have changed by then. So before you make any purchases, at least speak to us. Let us guide you, because like I said, we watch the prices daily, and we have a feel of how is it going. So yeah,
that's pretty much
that's
it from
basically
from our side, I guess. Yep.
That's all from my side. Anything on your side to add?
No, I think but for once I kind of missed the these market outlooks because the timing was unfavorable on my side.
No problem.
So
I hope you caught up.
yeah, I think that's pretty much all the info that we
But it
need.
makes sense, right? With what I said, everything kind of interconnects.
Correct.
So
I mean,
we're just gonna have to move funds.
it's just that like whatever's happening outside, and then you're like sometimes you'll have like a rough idea what's going on, and then when you get this information, it's like it connects the dots, and okay, now it makes sense perfectly why this is happening, why
this
that
is happening.
Yeah, I guess this just adds on to our knowledge base.
Yeah, that's what we try to do, guys. That's what we want to do, to increase the knowledge base, to make sure that we try to. I say you are paying us a fee. That's what I keep saying to everybody, and it's some or other our duty to make sure that we take some sort of responsibility for the students as well. We cannot guarantee them, but by doing such things, at least we are keeping ourselves knowledgeable to move accordingly.
Yep.
Yeah. So yes, so the gold account clients, we are making another switch next week. I'm not telling you what it is, because that's secret. Like I said, the switching part is our agency secret lah. So it's known to all of our agency, but the first switch we did at the start of the month has worked. We sold some other equities and bought into the Indian equities, which within I think about 2 weeks have come to a point where we didn't break even. So what we did was we bought, and then it dropped a little bit more. That's fine. And now it's come back to the point that we've bought. So we're not losing yet. So it's only kind of like maybe it dropped a bit more, but it doesn't matter. We bought like at 88 cents. We bought the Indian equities at 88 cents. Now, if you've been following the Indian equity, you know it looms at $1 all the time.
Yeah.
The average of Indian equity is at $1. So 88 cents, that's $1.20 to make luck. And that's a lot in terms of percentage. So just wait lah. So it drops to 70 cents, and we'll go and find some other places and go and buy. And that's the idea of keeping the cost low. And when you go back to $1, $2, it won't go back to $2, but if it goes back to $1.10, then we enjoy the margins. Yeah, that's unit trust.
All right. So, okay, Arwin, thanks as always for the information and all the outlook.
No problem.
And that's pretty much been from us. I have nothing else on my side to add on. I think I don't really have questions. I think this is more of a, to be honest, it's more of a one-way session for between me and you. It's more like you're giving a class lecture, and then we take it home
together.
Yeah. I mean, we can just take a moment.
We're gonna have to congratulate you. He closed another deal today, so everyone who's watching, clap for give Dalvin a virtual clap. He's actually doing really well. He set his targets and he's meeting them. That's one of the things that again is a bit off topic. That's one of the nice things that I feel in our agency is that everyone sets an individual goal, but once you set that goal, we want you to be accountable. It can be a big goal, it can be a small goal, whatever suits you. But once you've set it, make sure you get it lah. So Dalvin has been doing great. He has been achieving his targets. I won't say what they are. Let him say them. Let him share that with you on a personal level. But yeah, he's been doing great. I'm very happy with his progress. And everyone has been doing great in our agency. Actually, everyone who's passed the exams have closed sales. Except for the latest two ones who Jaswin and Nazrin, who haven't got through the exams yet.
I see.
But the rest of them, well done. Congratulations. I'm very, very happy with the way we're moving. Greater things to come. Everyone's getting used to it. And join us. It'd be great.
Okay. All right.
All right, man. Okay, take care. And we'll come back again with another topic sometime soon.
All right. Thank you, everybody. Take care. And as always, if you see this video, Remember to give it a like, share it, and then leave your comments if you like it, and do contact us if you need any investment related advice. One to one, we're always available, and that's it. See you guys next time. Take care.
Ciao.
Bye.